Please read this disclaimer carefully before proceeding further.
Hello and welcome back to the analysis. This is going to be a quick one. A lot of people actually have sent me private messages asking for a quick update on the markets. So here we are. So we'll start with dollar. So let's look into that. So if I go to DXY, now DXY has been rising up today. And if you have been following my analysis, you know that I've been bullish on dollar for a long time now. And the reason behind this is very, very simple. When when majority starts say the market is going to go one way, start thinking in opposite way. This is point where they started saying that the dollar was going to die because BRICS was coming and this and that. And since then I've been bullish, and the market has shown the longest possible spinning streak here, and even this week it has been going up. Now why it has been going up, there are certain scenarios which I will not cover here in this video, but very simply, what you can clearly see that the market has been coming back into this previous structure. It performed the retest, now this week it has been bouncing up, and I've been talking about this, and the dollar can still go back up, right? A lot of people were saying that after seeing this rejection that it will go down. I was still bullish, and I posted about this on Twitter as well, because this also ties up with USD CHF. So if you go and look at my USD CHF DXY thread on Twitter, you'll be able to see what I've been saying. Now, why I've been bullish is basically, this is the reason. So we have this complex W pattern forming up. Now, at the moment, it is at the midpoint of the W, but if it continues to go up, it can continue to rise up into 110 or so. And if it goes and challenges the previous high, it can go really high up as well. This is what technical analysis is telling us. There are certain areas around here, there are few intermediate targets and whatnot, right? There is a previous structure here as well. So those are going to be intermediate targets, but overall the market can actually come around to this area to perform to create this W pattern. And if it starts to fall down, then it will create a bigger M pattern. But right now it is going up and it can continue to rise up. And if it challenges the previous high, as I said, it can continue to rise even further high up. So this is what we have on dollar. Let's look at into S&P 500. Now, S&P 500 is very, very easy actually. If you have been following my analysis on social media and other places, you'll notice that I've been bullish on indices, especially US indices, since the last September, October. Right, from here, and there was a very simple reason. The reason was again that it was forming a W pattern. The W pattern completed. When it completes, the market falls down, and that's what it did. It fell down to a certain level, which you may find interesting that it came right into this previous structure, then jumped back up, and now it is showing slight rejection today. Now when I look at this, I do not start jumping into conclusions saying that the market is going to go all time high or going all time low, right? And so I should be looking at one level or one thing at a time. So if I go to the daily time frame, what you will notice that this is very simple. I posted about this in I think I believe I posted this on Twitter as well, but I certainly posted about this in our FCP Discord room. That the market was coming into 200 moving average here, which could actually push the price up. But another reason, which was basically was that there was an M pattern. When M pattern completes, the market goes up. It went higher up into a certain level, which you can find using FCP analysis, and then now market started to reject after that today. So today the news, whatever news came, that was just a catalyst for the price action, which was going to which was going to happen anyway. So this what the market is telling us, the M pattern completion, and then reaching a target and then starting to fall. Now if it continues to fall further down, then it can create this sort of M pattern here, but it remains to be seen, obviously, one step at a time. So now let's look at US 30. US 30 is actually far easier and simpler right now, because US 30 has been creating this structure, which looks like zigzag, but it is not. It is actually again a complex W pattern. And if you look at my trading view or other places, I've been bullish on US 30 since this October, late September and October. And the market, when the market came right here, I started to look for a bearish move down. And now today, what has happened here is simple like this. I've been posting about this, that the US 30 is actually struggling with 200 simple moving average. There is a video on my channel, YouTube channel, which actually talks about the importance of 200 moving average. If you do not use it, if you haven't watched that video, you're missing out. So what today has happened, the market came right into 200 daily moving average and started to fall down, which is very simple to understand. And then we also have this like M pattern. When M pattern completes, the market goes up. It went up. It went right into this 200 moving average along with one of our targets on from FCP methodology, and then started to fall down. Right, it remains to be seen whether it continues to fall down below this and then comes into this previous structure or even challenges that previous structure. But right now it has come into this previous structure right here, right, which actually kind of constitutes a liquidity or double bottom. So there is a possibility that it can fall down, but it remains to be seen. Okay, now next one is US 100. Now US 100, it can be a little tricky as compared to S&P 500, but again, pretty much like with other indices, I've been bullish on US 100 since October. So here was October, and the reason behind this is very, very simple. Again, we have a complex M pattern, sorry, W pattern. When W pattern completes, the market falls, and it started to fall down. It's reached a certain level. Now, this level is actually a shallow level. The market can still continue to fall down, somewhere around this area or so, because we have this previous structure. We have a few gaps available, and then we can also have a possibility of having a bigger having a smaller M pattern, which can look like somewhat like this. So these are all the possibilities or scenarios which are still available here. But what you should be doing is looking at one level at a time. So what has happened today is very, very simple. The market has been actually creating a W pattern here, and which a lot of people will not be able to identify, but you will see it like this. There was a W pattern. When it completes, the market falls down. So again, we were looking for a short here, and I personally took a short as well. So this is where the market was supposed to fall. Now it remains to be seen, especially tomorrow, especially 13th, tomorrow, 13th of October, and also on 18th, approximately there those days. You have to be extra careful with not just Nasdaq but other indices as well. Now you may also treat this as like bull flag or whatever, right? However you want to read it. So you can have a trend line at the top, or you can say there is a bull flag, and if it breaks up, it's going to go up. Or if you can treat this as a channel, or however you want to treat this, right? But the main point is we do not use these subjective methods of drawing these lines in our FTP method. We look for specific mathematical ratios which are given by Fibonacci. So we knew that the market was reaching this particular section, and it was going to give us this particular short opportunity. Now let's talk about VIX actually for a second, because I've been posting about this as well. Let me just remove this, and if I go to the weekly time frame now, VIX is very, very important, very, very interesting. I'm not sure whether I'm looking at the correct feed. Yes, yeah, I'm looking at the correct feed now. Okay, so VIX is actually looking very interesting. You might see that and I did post about this in on LinkedIn and other places, that the VIX could rise. So the VIX was actually getting bullish here, and since last August, it started to getting bullish around here. The market came back for a retest, created a bear trap, and then started to go up, created a new higher high. You can clearly see here, right? And then market started to go down. Now in this process, you can clearly see that we have this W pattern. When W pattern completes, the market falls down. We also had 200 moving average, so market started to fall down. And after that, today what has happened, it has created a double bottom here. Now it remains to be seen whether it breaks down or not, but if it continues to rise up, it can create a bigger W pattern like this. And if that challenges the previous high, it can create a bigger W pattern which can take it to all the way to 30 something plus as well. So that is a possibility based on the technical analysis. Remains to be seen whether that happens, but one level at a time. So this actually worked out very nice. If you go back and look at my post, this has been we have been bullish on this. Now let's talk about gold as well, because a lot of people ask me about gold. So let's look at that. Gold has been little confusing, and the reason behind this is actually not confusing. Like, recent price action last couple of days have been, like, little confusing to many, like, but I've been actually posting about gold as well, right? So here, we discussed this in our recipe Discord room, like, that, we have this complex M pattern forming. When M pattern completes, the market goes up. It went higher, right? And now why it is falling today is very, very simple. Now, first of all, let me show you why it was going supposed to go higher, not just because of the W pattern, but because of the 200 moving average as well on the weekly time frame. So the next this week was supposed to go higher, and it did, and it reached a certain level and then started to fall down. Today, it showed a little retracement. Why is that? Because we have this M pattern, and when M pattern completes, the market goes up, it reaches its target, and then starts to fall down. Now, just as a, like, additional tip, let me show you how to find that particular target. It's very, very easy. All you have to do is just take the fib tool, right, and draw from the top all the way to this level, and you will notice that it has come to one of these Fibonacci level. If you want to make use of this one, this particular swing high, you will see that there is another one. And if you want to make use of another one here, you will see there is 50% as well. And if you want to make use of this one, then there is 61.8, right? And you will also notice that, that this thing has created something what we call as, like, restructure, a retest of the structure, right? So this is the previous structure, and then we have tested today. So whatever the news came, that was, like, just going to be a catalyst for the price action to do whatever it wants to do anyway. So the market was, like, pushing higher, like, in last couple of days, and last a few hours, like, here, let me show you 4 hour time frame, and you will see that, the market was, like, dragging its feet. It was, like, trying to go up, 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 up. It wasn't stopping. It did not stop at these structural levels. It did not stop anywhere. It came right into that fib level, and it also came into the previous structure, and that's when it started to fall down. And this is what we were looking for. So I posted about this on Twitter as well. I'm short on this. There was, like, there was one swing trade that I took yesterday around here, which was actually not, um, actually, this was actually, yes, yeah, yesterday, last night. I got stopped out on that one, but the new one is working perfectly fine, and I'm expecting that, the market may actually come down and close this gap. Now, remember, these gaps may or may not get closed easily, right? Because if you look back, there was a gap here. If I let me go to the daily time frame, it will be much easier for me to show you. There was a gap here, right there. It's here, and this gap did not close immediately. The market kept on going up for several weeks, possibly a month or so, and then it tried to fool us, like, then went up and then fool us again, then went up and then closed the gap. So it closed the gap in October, but the gap was left in March. So you see, this gap may or may not get closed immediately. So do not bank on that. Do not just, like, say that, this is definitely gonna do that. No, it may or may not happen. So simply, like, start managing your trade, like, start taking profits, start, like, trailing your stop losses, whatever you do in your strategy. So like, that's what I'm going to do. So hopefully you enjoyed this analysis. Hope you found this useful. If you did, make sure you hit the like button, subscribe to the channel, and share it with other traders or trading communities, and I'll see you in the next one. Right, thank you.
Thank you for watching. Find and follow us on these social media channels.